Welcome, dear traders. You are watching a recap of the Asian session. Japan stock extended the 4-day rally, although they were growing at a slower pace. Trading was also rather mixed. However, Wall Street advanced significantly yesterday. US stock indexes rose sharply on a Wednesday, reaching the highest closing levels in almost a month. The Australian stock market followed suit on Thursday, extending its gains from the previous session. The question is whether optimism will prevail after the release of a CPI data. Judging by growing stocks, the majority of traders are betting on a further drop in consumer prices. They assume that the consumer price index, which has been steadily declining since June last year, dwindled in December as well. However, even if inflation drops, the central bank will hardly take a pause in monetary tightening. Inflation is still far from the 2% target. Fed policymakers have also said many times that rates could remain high in 2023 and possibly in 2024 to tame inflation. According to the CME FedWatch Tool, nearly 77% of investors believe that at the February meeting, the Fed will raise the benchmark rate by only 25 basis points. It will be interesting to see which figure the tool will show after the release of inflation data. Nevertheless, the central bank also stressed that it would make decisions based on the incoming data. Most of the interim reports, including a decline in the services PMI index sector and average hourly rate wages, seem to confirm that inflation has perked. However, what's really important now is that investors do not expect aggressive rate hikes, yet policymakers keep making hawkish remarks this week. This is why it's difficult for speculators to remain calm. The US dollar is rather volatile amid uncertainty over monetary policy. Today, the US dollar index has again returned to a 7-month low of 103.20. The rally of risky assets pushed the greenback down. As a result, it declined versus its main rivals, moving in a very narrow corridor of 103 and 103.20 in the Asian session. The yen took advantage of the US dollar's weakness. It's climbing higher amid expectations of a smaller rate hike by the Fed and falling US government bond yields. In the first hours of the Asian session, the dollar-yen pair added about 0.5%, approaching 131.60. The pair was merely moving in the range of 131.30 and 132.40. However, it's still trading above the pivot support level of 130.40, which limits the downtrend. The yen was mainly bolstered by other fundamental factors. Today, one of the leading Japanese media reported that the Bank of Japan is going to assess the negative consequences of its ultra-soft policy for the economy. Other major US agencies spread the news quickly. The Japanese regulator will announce its rate decision in a week on January 18. So, traders should be ready for any surprises. Back in December, the central bank slightly loosened the shackles on its 10-year yield target. As a result, it renewed hopes for a possible change in its ultra-soft monetary policy. The yen is recovering amid such expectations. However, the trajectory of the pair largely depends on the US inflation data, which will be released today during the US session. Commodity currencies kicked off the Asian session with an increase. However, the Australian dollar had to retreat, slipping into the downward range of 0.6888 and 0.6927. Although caution's optimism prevails in stock markets and oil prices are rising, the Aussie was unable to rebound. It dropped to 0.6894. Perhaps peer took the upper hand due to the upbeat trade data for Australia and the mixed inflation report from China. The consumer price index in China remained unchanged. The producer price index slightly increased to minus 0.7 from minus 1.3%. In addition, the hectic reopening of the world's second-largest economy has increased the risk of a global inflation. After a two-day drop, the Kiwi also tried to appreciate versus the US dollar, while bulls and bears are trying to take control before the CPI data. The NZD-USD pair failed to grow amid mixed data from China. Therefore, the pair fell to 0.6344 at the end of the Asian session, and it was fluctuating in the range of 0.6341 and 0.6382. And that's all for now. Bear in mind that markets will become extremely volatile after the release of the CPI report. Subscribe to our channel and keep abreast of the latest market developments. See you soon.